I think it's time to revisit William O'Neill's immortal classic, How to Make Money in Stocks. Hi everybody, my name's Joe. I am a professional trader with 28 years of trading experience, and I have gone through this book many times over the years. This was maybe the book that really was, what would the word be, epiphanous for me, where I really saw the powerful combination of combining fundamentals and technicals. And recently, while I was on a road trip, I listened to it on audio. It's like, I can't remember now, but multiple hours long, and it was really interesting just listening to it without seeing the charts. And what really leapt out at me were just kind of the one-liners of essential truths of technical and fundamental analysis. So I thought what I would do is just go through this book a few pages at a time and read you some of those important little tidbits and show you some real world charts to illustrate what the great O'Neill was talking about. I don't want to talk much about O'Neill himself. You can learn that somewhere else. But he made millions in the market using what was known as the CanSlim system. I think most of his money was made in the 80s and 90s, and built an investing empire. Investors Business Daily, a newspaper, and now a whole website and so forth. Sadly, he has passed away now, but his legacy lives on. So let's talk very briefly about the CanSlim system, and then let's just, and then I want to talk to you about the charts in the beginning, and then let's just take a look at his first ruminations on cup with handles. Probably the most basic, but very, successful, powerful investing pattern. Okay, so here is William O'Neill's famous and justifiably so CanSlim system. CanSlim is an acronym, and here, should I enlarge this? That's not any bigger. I guess just, just listen carefully. All right. And I will tell you what the most important letter in CanSlim is when we get to it. So C stands for current quarterly earnings and sales. The two main metrics are earnings, which is the amount of essentially money, income that a company makes, and sales, the amount of sales growth that a company has. So I suppose if we really simplify it, sales are the amount of money that the company makes, so to speak, and then the earnings are the amount of money that a company makes minus expenses. And basically, we want to see growth. We want to see quarterly earnings and sales growth. The higher, the better. I like to see, my favorite is seeing 4 quarters of triple-digit earnings growth with high sales growth as well. Now, part of it, there's so many nuances in this, and part of it is the size of the company. A large cap like Apple is just not going to grow as fast as a small cap. But a large cap like Apple can make an additional billions and billions of profit with just a few percentage increase of sales. So we don't have to look for such big numbers in large caps. So here, let me show you a quick example. Here is Super Microcomputers SMCI, one of the greatest stocks of the last few years. Look at this spectacular cup with handle breakout. In fact, let's save this as an example of a good cup with handle. But what I want to, this is the monthly chart. What I want to show you is, here are the quarterly earnings and sales growth, and we want to see the higher the better, right? So looking at quarterly earnings growth the last 4 quarters, plus 34, 0%, plus 71, plus 308. Definitely lumpy, but definitely accelerating in the way that you want it to. And then sales plus 34, plus 14, plus 103, plus 200. Pretty spectacular sales growth. And then the other one was annual. So let's see. Annual earnings increases. Look for significant growth. Mark Minervini says to look for a breakout year. So look here in 2021, Supermicro made $2.50 per share for the year. 2022, more than doubled, 5.65. 2023, more than doubled, 11.8. 2024, more than doubled to 24. That is really, really unusually strong earnings growth, and that's what caused, what are we looking at from 2021 to 24? When we go back to the monthly here, that's what caused the spectacular growth from 2021, $30 a share, up to $1,000 a share in 2024. Incidentally, this is not a buy right now, in my opinion. We've got we had some stage 3 topping action followed by stage 4, and now it's kind of trying to base out. I suppose, should we just go down a rabbit hole real quick? We've got a nice ascending 200-day, looking like it's getting a little bounce off of the 200-day. We could try to bottom fish this and buy it here with a stop right beneath the 200-day of about 7-8%. But there's so much near-term supply. I'd like to see it come up, retest 800, come back down, bounce around for a while, start working out the right side of the base, and probably wait and buy it up here about 950. Maybe put on a little teeny tiny position here. Now I'm getting off track, aren't I? Sorry about that. Let's go back to CanSlim. CAN. And I think, in my opinion, this is the most important letter. New products, new management, new highs, something new. If you look at, so what did Supermicro Computer do? So the new in Supermicro's case was AI, artificial intelligence revolution, which created an extreme demand for the electronic hardware, the semiconductors and such, to power the computers to run AI. And that's where Supermicro came in. If you think of other great stocks, Apple, when it had its huge move, was the iPod, right? Suddenly creating this little electronic device, much smaller than the Walkman, that could hold, 1,000 songs, and so forth. So the iPod, Microsoft, which invented essentially the personal computing system. And let's think of one more new. I guess Tesla, which didn't invent the first electric vehicle, but really created the first economical and well-performing electric vehicle, EV, right? Okay, so that's the CAN. So when you are looking for stocks, look for companies that have created something new regarding recreation, something new in healthcare, something new in the way we work, something, that's all I can think of right now. Let's keep going. Okay, supply and demand, shares outstanding plus big volume demand. We want to see that. So this is all about looking at volume, looking for it drying up and increasing to show the footprint of the institutions. Let me show you. And by the way, there is I have an affiliate link for this book in the description of this video. I also have a 7-day free trial on my Patreon service where I show my portfolio and focus list. And I also have links down there for Seeking Alpha Premium, the #1 financial fundamental analysis research website station on the web, in my opinion. So we are talking about the S, supply and demand. Here's Supermicro Systems. Again, look at the beginning of 2024. What we want to see is a drying up of volume. So here's kind of a complex saucer pattern here, like these demand hammers right here, by the way. Look at how near the end on the right side, right before it's going to break out. See how the volume dried up? See how short those volume bars are? And then we start to see some larger volume coming out. And then we see it pull back one more time, one more oscillation, and then a huge volume explosion. There's way more demand than supply. Let's see. The next one is leader or laggard. You want to see at the end of a market correction, you want to get into those stocks that break out of bases first. And that goes for the entire market and also for industries. When you see an industry suddenly heat up, you want to be in those first stocks that break out of bases. They are going to be least prone to failure and most likely to make big explosive moves. If you see 10, right now aerospace and defense stocks are hot. If you see 10 aerospace and defense stocks break out, you want to be in the first 3 or 4, not the 10th. The 10th one is probably going to be pretty anemic. It's a laggard, right? And he's got a bunch of great tips in this section that we'll look at in future videos. But 2 things that come to mind. One is to look for stocks showing good relative strength, strong relative strength in relation to the rest of the market. Minervini, for example, most of his buys are in stocks that have a relative strength of greater than 88, meaning they are outperforming 88% of the market. And another great tip is when there's a real bloodbath of a day, when you see the NASDAQ down 3% and the S&P 500 down 1.5%, 1.5%, look for those stocks that barely gave up any ground, or even better, went up on those days. Those often are your leaders. Let's see, the I, institutional sponsorship. Look for stocks that have mutual funds piling into them, fighting over shares, and we can get into that in more detail when we get to that section. I don't look so much at individual institutions, which institutions are in which stocks and so forth, but you can. We'll talk about that in a later video. And then market direction, I suppose, I said but market direction, I'm going to say it's tied for most important. You can't swim, well, you can, but you shouldn't swim upstream, right? It's so much harder. That's a really basic metaphor. When the market is obviously trending down, you should be in cash or shorting stocks. When a market is obviously trending up, that's the time to be buying these breakouts and buying pullbacks in these uptrends. The tricky part is, maybe a third of the time we're in an uptrend, third of the time we're in a downtrend, third of the time the market can't make up its mind, and it's chopping around in what I call a whipsaw market, and that's a really tough market to make money in. And the best thing to do in that type of environment is to just keep your powder dry, stay on the sidelines, let Mr. Market figure out which way he wants to go. So we are 11 minutes into this video. Hey, if you haven't liked the video, I sure would appreciate that. I think I'm going to try to keep these to 10 minutes or so. So let's just wrap it up there, and let's just call it an overview of the CanSlim system. So in the next one, I'll get it out. I don't know, whenever I can. I'm pretty busy. We will look at all of the charts. No, we won't look at all the charts, but I will talk about the chart section. I don't know if you can see that in the early part of the book. And then we'll start studying the cup with handle. O'Neill did some amazing research on the cup with handle. But here's a little teaser. This is a really, where were we? The weekly chart? Oh yeah, it was the monthly chart on Supermicro Computer. Now remember, with cups and bases in general, the wider the base, the farther into space. We often get excited when we see a a base of 1 month long, but in truth, it's those long, multi-month, multi-year bases that are the most powerful. And look at this wonderful base from early 2015 all the way to 2021 or so. Here's your nice cup. Love this nasty shakeout in 2018 and 2020 that shook out a lot of the weak hands. Here's a picture perfect handle, and here's your breakout. We'll look at that cup with handles in detail in the next video. Thanks for listening, and let me know your thoughts and comments. I will see you in the next one.